the United States outlook has been cut to negative from stable by Moody's. So the actual credit rating of the U.S. remains the same, and Moody's has affirmed that AAA rating, but it has downgraded the outlook. So I want to bring in Michael McKee, who, of course, is our go-to for all things economics and policy. Michael, this would be the last U.S. rating company that has kept the U.S. at AAA, correct?
That's correct. It was 2011 that S&P downgraded the U.S. during the budget problem that year, and then it was only a year ago that Fitch downgraded the U.S. Now, the question is, would Moody's doing it add anything to that? There's some question about whether it would matter all that much, in the sense that in some cases, portfolio managers wouldn't be allowed to own downgraded stocks, but downgrading to AA from AAA probably would not be a major issue. And then you go back to the 2011 experience. It had an immediate impact in the bond market that 2 days later was gone. So it's a black mark, but it probably doesn't mean a huge amount unless they actually do the downgrade, and then we'd have to see what effect it would have on bond yields.
I am curious, though, too. I mean, when you see these reports, Michael, and the idea that they're not necessarily talking about the fundamentals themselves. They're talking about political polarization. They're talking about the dysfunction in Washington as sort of the backdrop for why they're making the decisions to put these ratings on watch here. And we'd be remiss in not pointing out we're 1 week away from a budget deadline. The Speaker of the House is on his way to Europe instead of actually in Washington working on a deal, and we still don't have a bill on the table. So why should we not think that the Moody's, and for that matter, Fitch and S&P, will follow through?
Well, we don't have a direct warning from Fitch and S&P that they would go further than their downgrade that they've already done. But Moody's, certainly with a negative outlook, could take additional action if the U.S. were to have a government shutdown next week. Maybe this, it could be that Moody's is looking at this as sort of a warning shot over the bow of the USS Congress or something like that. The issue for the ratings companies is not for the U.S. the ability to pay. We've got a printing press. We have basically unlimited funds. We'll always pay our debts unless obviously a debt ceiling issue comes into it. But the U.S. can always pay. It's a question of would they pay, or would it be a messy situation, as Moody's sets out in its press release today. And that is why they would downgrade us, not in the sense that you're not going to get your money back, but that it is an issue for debtors that the U.S. And creditors that the U.S. would be having trouble.
I get that, too. And I mean, I'm just going through Moody's statements here because they're also looking long term, too. I mean, they're basically just saying, look, if there isn't some sort of resolution on these fiscal issues, I don't mean just the short term things that we have to deal with in the next week, but if there's not some sort of longer term shift in how we're approaching these annual budget deals, that there is a material potential, or some potential for a material decline in the strength of our fiscal house.
It is interesting because when you get to the section on the long-term outlook, they do look at the federal interest payments relative to revenue and GDP and suggest that it is going to rise significantly to an unsustainable level, which helps make the argument that some people in Congress are making, that they need to cut spending as soon as possible. And so this will probably be taken up by the Republicans as part of their battle cry in terms of that.
I'm sure it will.
We don't know. We don't know if it will, if we will actually reach those levels, because if the Fed cuts interest rates, then it won't be as bad. But it is something that they seem to be concerned about.
All right, concerned about here, I guess, though, the fact that the speaker is actually not in Washington, maybe they're not that concerned. Michael McKee, of course, our Bloomberg International and Economics Policy correspondent. We should just point out that the Republicans did say that they do plan to put out a budget plan over the weekend, though, and when the Speaker of the House gets back into the country, maybe they can try to vote on it. The United States credit rating outlook changed to negative from stable over at Moody's Investor Service.